Hello, everyone, and welcome to today's Forex session. And first of all, thank you so much for your patience. I'm not quite sure what went on with my computer, but everything seems to have crashed. My browser, all my charts. So it's just taken me a few minutes to get everything put back together and back to normal. So, as I said, thank you so much for your patience, and also thank you for taking the time out of your day to come and join us. And us is those of you who come regularly will know it's me, Anna, and my husband David, who is sitting next to me. And of course, this is the Forex session. So, of course, we're going to have a look at the Forex market. But before we do, may I just draw your attention to the disclaimer that I know you can see on your screen. As you know, trading can be a very risky business. So please don't ever think of using money that you cannot afford to lose. Those of you who come regularly will know that we will be looking at the markets from a technical perspective through the prism of what we call a volume price analysis. And this is the book where this methodology, the concepts of this methodology is laid out. It's up on Amazon, and we're very proud to say that it's been translated in about, is it 10 different languages, David? Yeah. It's about 10 different languages. Our latest ones will be in Spanish and also in Korean. That's obviously South Korea. And we're really, really proud of the fact that so many traders and investors have taken the concepts that were laid out back in 2013. We have never said the expression volume price analysis, but we actually came up with it in 2013. You see it everywhere now. You see it hashtagged either volume price analysis or VPA, and we're absolutely delighted because what it has done, it has truly, truly transformed the trading and, as I said, and the investing of so many traders and investors. And if you want to catch up on the kind of comments that I get, or some of the comments, is you can either certainly read the reviews that are up on Amazon. We're up to now 3,462. The nice thing is that 75% of those are actually 5-star, and we get some 1-stars. Of course, everyone does, and fine, everyone has an opinion, and it's not for everyone. But what we have discovered is that if you keep an open mind and you take on what our take is on this relationship, this very important relationship between the price action and the volume and the other elements, which is support and resistance, we use candles, candle patterns, and time, and you incorporate them into what you already know. When we're not asking you to throw the baby out with the bathwater, what we're asking is, or what we're suggesting is that you take it from first principles, you understand the relationship, see what the chart is saying, look at the price cycle that VPA reveals on the chart, so at least you know where you are in the price cycle. And on top of that, you can add whatever you've been using, whether it's proprietary indicators, whether it's standard indicators such as moving averages, Fibonacci, MACD. It really doesn't matter, but it is, if you like, VPA is your first principles. So that's what I've got to say on that. And just to go back to what I mentioned earlier, if you don't follow me on what used to be Twitter, which is now X, that's where you will be able to read some of the comments from traders, and not just individual traders, but whole trading groups that have taken the concepts. And these are traders in options, zero-dated options, to expiry options, ODTE options, other kinds of traders, commodity traders, forex traders. They all like to share their charts and just tell me how they've adapted it to their own approach, as it were. So I just wanted to make that known to you, and also mention that the audiobook will be ready next month. It's something that I've been asked to do. I'm actually going to narrate it myself, which is a bit daunting. I hope I can do it justice. We had a long talk with the producers, and they felt that it's by me, and I am a woman, so it's just something that they felt would do the book more justice, if you like. So that should be available certainly by the back end of January. Right, let's go and have a look at what's been going on in the markets. Something slightly different today. We are actually going to focus on one particular pair. And we're going to look at the pair from all sorts of different angles in terms of timeframes, but also touch a little bit on the fundamentals. What are the drivers for each of the currencies in the pair? Because we want to try and give you some guidance, not necessarily a template, but a guidance of what perhaps you should be looking at if you decide that you want to focus on maybe one or two pairs, and the kind of background that you can be, kind of background research that you have to do. We're going to stick with one of the majors, and that major currency pair is actually the dollar CAD. Not only because we've got some really nice price action on the charts going on at the moment as we speak, and as I said, we're going to look across the time frames as well. I am, and obviously David, we're going to be looking at the MT4 platform, we're going to be looking at the Trading View platform, and David has the Ninja Trader platform. Obviously, with the dollar CAD, with the majors, the dollar is the, if you like, the principal currency, and all the others are the counterpart currency. If you came to I think it was last week or the session before that, we looked at the Dixie, and I'm actually going to show the Dixie here on Trading View because it's just, I prefer it. I have it on my MT4 platform, but I just want to show it here on Trading View. And what we talked about was basically, as we can see here, the Dixie had been in a long period of consolidation, really just not going anywhere, but very strong levels of resistance and support. As we can see here, we had one attempt at a breakout, which was a fake out, because as we can see, there was a rally back towards the congestion. But as you notice, it didn't actually make it. But what was more significant, it didn't make it to the volume point of control. Nevertheless, it was still a fake out, which is one of the reasons why so many traders don't like breakout trading, because you do have to be aware that is a characteristic, if you like, of breakout trading. You can get fake outs. There are the advantages of breakouts is because you have the consolidation, you know where your stop losses are going to be, and yes, you do get these fake outs, but you can contain the losses, if you like. We then do get this strong break lower. We can see this very big down candle triggered the volatility because we have these little purple arrows. It tells us the price action is outside of the average true range, and that was on the, if you recall, that was on the much better than expected CPI. Well, not that much better, but the market took it as better than expected. Bond yields went slightly lower, and it was sort of off to the races. But when you get a candle like this with the volume underneath it was okay, but really, given the spread of the candle, it didn't sort of match up, as it were. So what that tells us is that, yes, it is a successful breakout in the sense that you've got some momentum and you've moved away from the consolidation phase. But because of these other factors, the expectation is that we would see a retracement into the spread of the candle. And we did, clearly. what we then got were two sessions where the Dixie attempted to rally. We got a decent amount of volume underneath it. But what that also told us, and this is another function of VPA, it gave us these two anomalies, because with that amount of volume underneath there, we would have expected that those candles to be wider. They weren't. So although we had the first reaction from the volatility and the momentum, we had the pause, we had the retrace. That kind of told us that possibly that was not it was not a true reversal, and we weren't going to get a V-shaped reversal. It was just simply that, a pullback. And in fact, the Dixie carried on low. We then had two more attempts to rally. The first one was quite positive because we have like a little hammer candle here with a decent amount of volume, and then this candle here, which is an up candle. But look at the wicks, and wicks are so important in a candlestick analysis, because when it tells you what the bias is and what is going to happen next. And yes, we had a decent amount of volume, and yes, it was a reasonably spread candle, but it's the wick to the top that tells you there is still weakness in this Dixie. And in fact, it has then subsequently been selling off, as we can see, actually on rising volume, which is a positive sign. Now, what we have seen is we have seen a bounce, because what you must also remember is with charts and with price action is you get what you call technical reversals. That's simply the market participants saying, well, it's fallen so low or it's gone so high, then there will always be buyers and sellers, and you will get this technical reversal. And that is quite an interesting point at the moment, because it's reaching where is it aiming for? Well, logically, we're looking at 101. Is that going to be sufficient, the buying that we see later today, to actually push that further back to the resistance that we have here at 103? We will have to see. With regards to the to the falling prices and rising volume, what we then have to look at is, when we see this rising volume, you really want to see some really nice, deep, wide spreads on the candle. At the moment, it looks okay, but you probably can't see there is a small wick to the bottom of that candle. So possibly it's no surprise to see the buying coming in as well. So that's the story behind the Dixie. That's what the dollar is doing at the moment. And those of you who have our quantum indicators will see that it's all reflected on our CSI and also reflected on the matrix. And from then on, it's for you to decide how do you want to play this? What are the pairs that you do you want to try and find a trading opportunity to take advantage of that dollar weakness? Today, we're actually seeing a reversal, and that's pretty much up to you. You can either be the kind of trader that says, okay, I don't really have a specific soft spot, if you like, or preference for a pair. I just want to see where there is a trading opportunity at this particular moment. Although I should actually qualify that by saying that obviously Forex, as you know, there are three distinct sessions, and obviously currencies and currency pairs, some will be more favored given the local market, as it were. The yen is more heavily traded, if you like, in the relatively in the Asia Pacific session, as is the Aussie dollar. Traders like to favor their local currencies, as it were. And then when we have the deepest liquidity, when we have this afternoon at the American and the US session, that's when possibly the Canadian will certainly come more into its own. But that doesn't mean to say that there aren't opportunities in all the sessions. You just have to do the research, and from an observational perspective, there is a little tool over at investing.com, which I'll bring up next time, which actually tells you they've done all the research on it, and they will tell you which pairs are most volatile in all the sessions, and they also break it down to the actual time. between what time, so you can actually be even more focused if you want. I don't have the link now, but I will have it next time that we are here. What we also have to do, and I haven't got it up at the moment, is go over when you've decided on your pair, and we have decided on the dollar CAD. In fact, I'm going to do it now quickly, so I'll show you. You then have to check, obviously, the economic calendar. And because we're going to be focusing on one pair, what I suggest you do is you go over to tradingeconomics.com, calendar, and set it up in this way. And there's a couple of really cool features of this calendar. As you can see here, it's delivered all sorts of countries that we don't really want. So let's quickly, just bear with me. I'm sorry, this is because we had a break earlier on with the internet and my machine, the double trouble. Let's quickly just take those off. And you can see here, you can find economic data on every country on Earth. But there we are. Let's do that. Okay. And that hasn't worked. I'll tell you what I'm going to do. I'm going to set myself up. Can I just David, do you mind if I pass over to you? No. Yeah, I'm going to pass over to David because this is boring for you. Then we can come back and I'm just going to set this up. And I'm going to look at the dollar CAD possibly from a longer term perspective. But I'll pass over to David because it's a shame for you to miss what's actually going on in the markets at the moment.
Hi everyone, very warm welcome. Good to see you. Recognise a lot of the names in the chat box, so good to have you here. And I've got some of our students as well, so it's nice to see. I'm on NinjaTrader. I've got NinjaTrader and TradingView really primarily to across multiple timeframes. I've also got I've set up the heat map and the currency matrix over there as well. I'm looking at the currency strength indicator too, just to get a sense of what's going on. But what I really wanted to start with is here, because this is a complete workspace from multiple time frame perspective. So we're looking at it from the 15-second on the top left, right the way down to the 15-minute on the top right. So a complete time slice. If you can only manage to work with 3, that's fine. I like to work with more than that, and so does Anna. So we will tend to have 6 or even 8 or perhaps even more. And obviously we're looking at other things as well, not just at the pair itself. We're looking at the matrix, which I'll go to in a moment on TradingView. But what I wanted to highlight here is really the whole issue of why we use multiple time frames and what that tells us if we are in a different time frame. And we have a classical example here. If I had just hopped down onto the 15-minute, this is a very simple workspace. All I've got on here is volume, and I've got the volume point of control. Nothing else at the moment, just to keep this really clean and simple. And the volume point of control is at the yellow dashed line here. That is where we have the highest concentration of volume for the dollar CAD on this particular time frame. We've had this nice rally this morning, which started around about European session start time 7 o'clock. Some nice VPA lessons in here, but I'll come on to that in a moment. But what I really wanted to focus on was this whole issue of the volume point of control on the 15-minute time frame. Because when you're on a faster time frame, you may be on perhaps not the 15-second, but maybe you're in here somewhere on a 3-minute or a 5-minute maybe. And you are wondering why this particular pair that was going along so nicely has now gone into a congestion phase. We've stalled. That trend that was developing has come to a bit of a pause point. It doesn't necessarily mean that we are going to see a reversal. It just means the price action has slowed. And one of the reasons for that is purely because of what is happening over here on the 15-minute time frame with this volume point of control. And the reason it's so important is because the slower the time frame, then the greater will be the significance of whatever it is you're seeing. Whether you are seeing that from a volume and price perspective, or whether you are seeing it from an indicator perspective, it doesn't matter. The slower the time frame, then the greater will be the importance of that event. And the reason that the price action has, one of the reasons at any rate, that the price action has stalled at this level is because of that volume point of control. It carries a lot of weight. Now, equally, you might well go down to a 30-minute or to an hour or a 4-hour or a daily, and you might find a similar reason. And of course, you can't go on doing that forever. So at some point, you have to limit your horizons, if you will, to what it is you're trying to do. Because if you're down at this end of the market as an intraday trader, there's really no point in going out to the dailies and the weeklies and seeing the fact that perhaps even there we are approaching a volume point of control, or we've got a top going in, or we've got some accumulation, whatever it may be. You have to define, if you like, your window of opportunity. And you can't obviously go right the way down to the very slow time frame. So you have to define it. It's the analogy I've used many times is of a blinkered horse in a horse race. The horse is blinkered because it gets distracted by other animals around it, and therefore they blinker it, and it focuses on really one thing, which is the finishing line. And in a way, it's similar here. You have to frame it. It's like the view here, if you like. It's like a monitor view. You've kind of said, well, 15 minutes is my slowest time frame, or maybe 30 minutes even when you're on an intraday basis. And that's really your view of the world in what you are trying to do at present, which is to scalp some pips out of the market and really not a lot else. You're not going to be looking at what OPEC are doing in the next few weeks or months, what their strategy is, what the supplier is like. You're probably not too particularly interested in the price of oil on the slower time frames. You certainly might be looking at it from an intraday perspective. But other than that, you're really focused on this time horizon. So I really just wanted to make that point that when you get a market that's in congestion, you've got to find out why. Is it a question of volume? Is it a volume-based issue? Is it a technical issue? Is there some fundamental issue? Are we waiting for data? Are we waiting for news? What is it? What is the reason that the market has stalled at this particular point? And you can see all the little lessons here. I can pick them off for you very easily. If you're looking at things like, let's look at the little hammer here. We've got a lovely little hammer here. A little bit of volume comes in there. So when you see that sort of price action, and you've got also narrowing of spreads in the downtrend here, and appreciate this is a 1 minute time frame, so very, very quick. But every VPA lesson can be replicated, whether it's a 1 minute or a 1 month. It makes no difference. So you get a little hammer here at the bottom. We get some decent volume under that, and then up we go. But look at the volume under here. We've got a widespread candle here, but the volume, not only has it been falling away under those 4 candles, but the volume under this last one looks very, very lightweight. Just from a comparative perspective, the candle looks too wide, and you're always looking for comparative. You're looking for benchmark. So you might be looking at maybe this candle over here. What's the volume like under that one? The volume was really low under that one. And this is another classic example of anomalies that we're looking for all the time. There's 2 things you look for at VPA. You either look for things are in agreement, or are they in disagreement? In other words, an anomaly. And clearly this is anomalous. Why? Because we've got, first of all, we've got 3 rising candles, fine, but we've got falling volume associated with that price move. That's anomalous. If that move is going to generate some momentum, then it should be the other way around. You'd want to see this one over here and the taller one up here. It's not. It's the inverse of that. So you've got a rising market on falling volume. Clearly, that is anomalous. And therefore, whatever this time frame is, it's a minute. I appreciate this is super fast. It doesn't matter. That's anomalous, and it's telling you one thing loud and clear, that the momentum, the buying momentum, the bullish sentiment, the buyers, the market makers are not participating. It's draining away, and therefore do not expect this move to go very fast. And therefore we go into a congestion phase, which is what we expect to see, and then we get this little reversal down here. Now, I appreciate we're trading around the volume point of control, but that is like a mini lesson. It's the sort of thing you see all the time, and it's the sort of things you're looking for all the time. We're trading around the volume point of control here. We've got it here as well. We're well away from it here. So what other lessons can you look at here? Well, you look at other anomalies. For example, is this candle in agreement, or is it anomalous? I would suggest it's an anomaly. Why? Because for such a widespread down candle, that volume doesn't look in agreement. It should be much taller. Why do I say that? Because if I hop over here to this candle, if we take that as our benchmark candle and say, yep, let's assume that this is price and volume in agreement, we're going to use that as a benchmark, and there's no reason not to, because we're in a standard session here, we're well into London by an hour, and everything's just ticking along, so there's no reason not to take it as a benchmark. If we look at this candle over here, the volume is not in agreement. This should be much taller. It should be even taller than this one, because you've got a widespread price and relatively low volume. And just as it takes effort to rise, so it takes effort to fall. So if you see that, it's really telling you that at that point, whatever it is you're looking at, whatever market you're looking at, is really not falling strongly, because the bearish sentiment is not heavy. It's out of alignment. It's out of whack. It's anomalous. And this is what you're looking for the whole time. We then get a little 3-candle rally. What are we looking at once again? Pretty much the same as we saw over here where it was. There we go. So you've got volume that's falling away. And again, on that last up candle, would you expect to see the volume a little bit higher on that one? Yeah, for sure. But nevertheless, on 3 candles, you've got falling volume again. So that's a very quick, that is what you're doing the whole time. You are reading the chart. It's almost like a piece of piano music, or indeed any music for any instrument. You are reading the notes as they appear on the sheet, and you're reading it bar by bar, and then groups of bars, and then you're putting it together in multiple time frames, and you're looking at the similar sorts of things in multiple time frames, and then you're looking for technical things which, like the volume point of control on the 15-minute, are giving you a reason as to why, to answer that question, why has this stopped? Why are we at a pause point? Very quickly before I hand back to Anna, what I've done also here, I've got, we're now on Trading View. I've got the dollar CAD, but what I really want to show you was I've got the matrix here, multiple matrices. I've got a 1 minute, a 3 minute, and a 5 minute. And all I've done very simply is isolate out the dollar. Why? Because if we're trading a major, we want to know what that dollar is doing on the dollar matrix. If we're buying or selling the dollar CAD, what's happening with all the other dollar pairs? Are they moving in the same direction, or are they not? Are we trading something in isolation, or are we not? And exactly the same principle applies to, I've got the currency heat map here, and I'll come back and explain this in a bit more detail. Are you okay to take over now, darling? Yeah. I'm going to pass back to Anna at that point. We'll come back to these a little bit later.
Hi, apologies about that. My everything collapsing around me here. Right. Okie doke. Let's have a look. This is what I wanted to show you. Let's move that out of the way. Trading economics. It's a calendar that we have recommended in the past, and it's certainly something that we suggest our students also use. I mean, most of us are familiar with Forex Factory, and there's absolutely nothing wrong with Forex Factory. It's a great calendar, and it's a certain, and lots of other, you can find calendars in lots of other places. Forex Factory is great as well because you do get some really, really nice graphics with it as well, because we have to remember that data can be read like a chart. You present a graphic, so you can expand it up here, and you can see what the trend is, if there is a trend. I mean, this just picked one at random, the S&P composite, blah, 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 blah. And you can see it's been rising, then falling, and now it's on the rise again. Now, that may or may not be appropriate to the currency pair or instrument that you are trading, but it gives you a really nice mental picture of what that particular release, what that particular data set is actually saying. Right, trading economics. Those of you who you saw, you can have hundreds of releases coming through. Clearly you don't want that. You just want to focus either on a broad set, so the ones that are likely to be moving the market in that particular session. But if you want to refine it even more, you can just create ones that are specific to your currency and currency pair. So this is the dollar Canadian, and we can see what's coming up today. It also explains sometimes if a currency pair that has been moving quite nicely and then it stops and then it goes into a consolidation phase, and that could simply be because there is an important piece of news. And certainly at 1:30 we have a Canadian current account. It's been highlighted as a when it's bold like this, it means it's a tier 1, so it has potential market moving abilities. What you also have to remember about fundamental news is the fact that the calendars just classify releases into impactful, not so impactful, and basically they're minor. But what they don't do is they don't distinguish. They don't sort of say, well, actually, this one is far more important because of where we are in the economic and business cycle. That's something that you will soon realize yourself. For example, up until a couple of years ago, a year or so ago, when inflation data, well, it was interesting. Interest rates, well, it was interesting, but because there was in effect no inflation, there wasn't a lot the central banks were doing other than constantly say, well, we want to get to 2%, we want to get to 2%. Well, they got to 2% and beyond, and look what's happened now. The market pays very close attention to the inflation data. We've got the PCE tomorrow for the dollar, because now it's the boots on the other foot, as it were. Well, when is it going to get back to 2% as it were? But at the time, although it may have appeared as a tier 1 and a data set that was likely to impact the market, the market narrative at the time wasn't really focused on inflation. Similarly with the labour market, and that's something it's part of your research and part of understanding your currency and your currency pair. So there we are. So this is what we have today. This is what we have tomorrow. We've obviously got even more important data for the Canadian. We've got GDP. We've got, as I said, the core PCE, something data set that the Fed pay very close attention to. And then we don't have the NFP because we've had the Thanksgiving holidays. That's normally delayed until next week. So that's what you do. You look at that, and you will know exactly what's coming in terms of data in the session to come. What you can also do with this calendar, which is really very, very neat, and that it has an awful lot of categories. And this is what I meant by saying, well, do you want to refine it even more and look at the ones at the moment? Inflation data and is very, very important. So anything to do with inflation and prices and inflation. And what you can do, I've actually just highlighted this one and I put it in a separate tab. You go there, and it's really neat. It takes it moves it forward. Sometimes we're very bad as traders. We just focus on the here and now, nothing beyond the next hour or the next 2 hours. Which if you're a short-term trader, an intraday trader, fine. But if you're going to be perhaps doing staying in a position maybe 1 or 2 days or even a week or so, then it helps to know, well, what is going to come up? What am I looking at ahead that could impact the position that I'm in? And what it very helpfully does, it takes these categories and then just gives you the releases that are coming up, and I think I've got them until the 14th of December, because the markets do look ahead. Big players, this is what they do. Yes, they're focused on the here and now, but they also think, well, what's coming up, and is it going to be something that's going to impact the price action of the here and now? Because markets do like to position themselves. You will see this positioning. You will see traders closing out or maybe putting speculative positions on, and you will certainly see it in terms of the price action calming down, going into a consolidation, and waiting for this important piece of news. Certainly, we've got today we've got the GDP. We've also got the GDP for the US at 1:30. that's what the market does. And why haven't I got let's have a look, USA and Canada. There we are. So you've got that. And then the other one I've got was interest rates. And this is where they also put the central bank speakers, because obviously whenever they say anything, the market pays a lot of attention, and it's all about interest rates at the moment. And if you were following the market yesterday, you will know that Waller and Bowman are credited for giving the market a bit of a boost, kind of rowing back a little bit about keeping interest rates higher for longer. The market has interpreted it as cuts are coming sooner rather than later. That's what the market interpretation is. But, sometimes it doesn't necessarily reveal what is on the chart. Right, getting back to the dollar CAD. So that's a little bit there. And this is my profile for the dollar Canadian. And one of the reasons for looking at the dollar Canadian, and it's quite in fact, let me do it on TradingView because it's slightly more descriptive, and that is the daily chart. Because traders sometimes don't pay an awful lot of attention to the daily chart, even the intraday traders, because it can give you an idea of what could possibly be coming along the following day. I mean, we saw that if you were with us last week, we saw that to great effect in the pound yen. If you haven't caught that, there's a recording of that up on YouTube. And basically, what I said was at the time on the daily chart of the pound yen. Yes, it was falling, but each of the down candle all ended up with a wick to the lower part of the candle. And lo and behold, we did get a reversal, and it has been going up since then. So the daily chart is really important. And the reason I want to feature the daily chart here is because we do have another break from the volume point of control, a sort of bit of a sideways movement, but not as contained as we saw on the Dixie. But we can see here we had this break, then we had this wick to the bottom of the candle. So clearly, in the third part of in the American session, there was we can see that was the buying that was coming in. Was it enough to push it higher? Well, we can see there's a wick to that candle. So certainly by the time Asia, Europe came along, yep, it was up, but in fact it ended up lower. And we had a rise in volume as well with the price falling. So that tells us, yeah, it's going to carry on lower. Yesterday, it certainly did. We certainly had very high volume compared to this session and this session. But yes, we had a little wick to the bottom of that candle, but we also had this anomaly because we had this amount of volume on a candle of that size, whereas we had this amount of volume on a candle of this size. And you can go and look back and you can benchmark it maybe against this one. There's lots of examples that you can go and find, but and that was that's interesting. Not a huge wick to the bottom of the candle, but given the anomaly between the size of the candle and the amount of volume, that was possibly telling us that we were going to get some kind of reversal. It may just be a short rally, and this may carry on lower. But from the perspective of a trading opportunity, it was certainly, I would contend that it is more than enough, and we've certainly seen it in the charts that David has been looking at. And what I would also like to say is this multiple time frames. David had the 15-minute chart up, and we could see that was the reason why we had a pause in the price action. It had come to a point on another time frame, on a slower time frame, that it would inevitably come to a pause point, and the reason why it seems to have stalled on the faster time frame. Those of you who have our indicators will also know that one of the ways we mark important areas of support and resistance is with the Camarilla. The Camarilla indicator, and these are the Camarilla protocol is based on the old floor pivots from the floor traders, and the indicator that we've developed is essentially 6 levels. The difference between what we've created and what's out there is basically the levels that appear on the various time frames. They're not all the same. So, for example, the levels from the fastest time frames up to but not including the hour, they refresh every day. The ones from the hour up to the daily, they only refresh once a week. So not only do you have levels, the immediate levels that you have to be aware of, we saw as was also reflected in the volume point of control on the 15-minute chart. But when we look at the hourly chart, and it's a chart that we always suggest that is a good benchmark to have, not only because it's we've got the Camarilla, but because you will find the accumulation and distribution indicator also highlights very important potential reversal points. Is that the price action was approaching the S3. Now the third and fourth Camarilla levels are really, really important. I would say the third is possibly more important. It's where price action almost inevitably stalls. And it's also supported by the VPA, because this is the hourly chart. This is the candle from this morning. This is when Europe came on board. This is where we saw, if you like, that reversal in the dollar CAD come about, and it's supported by the volume. Now you could say, well, there's the volume there. Well, this is only Europe, so you have to sort of look at it in a relative perspective. Then we had London coming on board, and of course you have a big injection of volume, and we get a kind of doji candle there. So it reflects the kind of volatility you get. Also, when the new sessions open, you have a lot of orders coming in, orders closing. So it's always a little bit chaotic. But this is quite interesting. It's approaching the S3, and don't forget this is two sessions now, Europe and London. So there's quite a lot of liquidity under there. And the volume is kind of falling away a little bit, and it's also hitting this level here. It's pulled away, and now it's pulled away again. So this is now clearly a very, very important level. It's holding up, if you like, this reversal that we are seeing. And what may happen now, it's 10:30, and given that we have this important piece of news coming up, what we may find is that the dollar CAD will simply go into a period of consolidation, simply because it's had its little run this morning. There was certainly enough in there for anyone who is a scalping trader who only wants to take a few pips out of the market. And certainly the spread on the dollar CAD is it's not like a cross pair. But having all this other information as well as the VPA, the levels on the slower time frames, the context of this price move, given what is coming up ahead in terms of news, that would also help to make the decision saying, well, do you know what, given this is what's going to be happening in the next sort of 2 to 3 hours, let me wait and see. And as I said, also with the Canadian, yes, we do get moves in the London session. Certainly in some of the cross pairs we do, the EuroCAD can be a very good mover in this at this particular time of the trading day. It always picks up speed when New York and obviously Canada is open as well, because it's a local currency. If we go back to the 5-minute chart, I've got a slightly different setup for the 5-minute chart, and I've actually got the Renko, and I've got what we call the time accurate Renko that we've developed for TradingView. It's only available on TradingView. This is the view of the price action that we've had from the 5-minute chart. This is that break higher that we saw at 7 o'clock this morning. It's on volatility, nice volume. Then we go into consolidation because it's volatility. It retraces within the spread of the candle, but it also triggers the Renko. And what the Renko does, it helps to keep you in the move. It if you like, it absorbs all that spikiness, all the choppiness that you can get, particularly when you get those crossover those crossover periods. And what's also interesting, we had a little bit of a pullback here. This is, as I said, this is after London. This is at 8:30. We had another little burst of momentum coming in, another volatility candle again into the spread of the candle. But although we had that pullback on the Renko, and we had the two red bars there, it's interesting that it rested then on the volume point of control, because the volume point of control, not only can it act as resistance, but it could also act as very, very strong support. And in fact, it was enough to push it higher. Then we have another little pullback. We have quite a lot of volume under that candle, but wasn't enough to push it back. And the Renko can then give you the confidence to stay in. I don't have the trend monitor on here. The trend monitor works really, really well with the Renko chart, certainly on MT4, and you will find that will stay red as well. So blue as well, sorry. So again, it's all about the confidence to stay in the move. This is where we hit that S3 on the hourly chart. We can see there's a reasonable amount of effort going in, but it's clearly building some kind of consolidation. And we know that because the pivots have been triggered. I talked about the pivots extensively last week. What the pivots do, they begin to mark these areas. We've had a pivot high, we've had a pivot low, now we've had a pivot high. And let's see if we get, and the more the pivots build, that is the consolidation. What also happens is with this Renko, it simply moves sideways. It's just very, very flat. So we're looking at a flat piece of price action, and we can see that equivalence on the MT4. That was the daily chart. Yes, and this is what I mean by the trend monitor. These are the little pullbacks that have been absorbed. It's actually come off the R2. At the moment, this is saying by all means stay in, but looking at the time chart, the trend monitor is still blue. It's a decision that only you can take, given what you know about what is likely to be, what is coming ahead. Right. If you've got any questions on anything we've said, please do put them into the chat box. Just before we go, the last thing is what I've done also, you might want to do, is actually look at the CSI. We're always very neglectful of the CSI, aren't we, David? I mean, we just take it for granted, but it's a fantastic indicator because it gives you a visual picture of what is actually happening on the chart. And what I've got here, I've got the 5-minute and I've got the hourly. And I've taken all the other currencies off. And in fact, it tells us the perfect story. The lines are kind of moving in the same direction. We don't have the divergence that we want to see. On the hourly chart, we still have the dollar rising, and the CAD is possibly going to turn lower. We don't know. As I said, that's really much more. I would like to think about it, well, this is where we are at the moment, but what is coming up ahead? I'm not saying it's predictive, far from that, but it just picks up the what is going on the as I said, on the hourly chart. But the dollar certainly looks as though it still wants to move higher. And of course, with the dollar, as always, we haven't looked at the related markets for these currencies. One of them, of course, being bonds and bond yields. And also between the dollar and the CAD, you're going to have to keep an eye on the interest rate differentials between the two countries, and also with the Canadian with oil. Although I had to say with the CAD, there's not quite such a strong relationship with oil for the moment. A lot of it is because it's a political thing in Canada, wanting to really move away from being a major oil producer, as it were. So it's not really a petrodollar currency, not as strong a petrodollar currency as it used to be. It's still a commodity currency because Canada still produces lots of other commodities, but its relationship with oil is not, I would say, as strongly correlated as it was before. But then that happens with correlation in markets. Things do weaken and then they come back together later. But the most important is really what are we seeing on the 5 minute at the moment? It's going, although the Canadian is ticking up, not necessarily against the dollar. There are technical reasons that we've seen on the charts. It could simply be that the buying momentum in the Canadian has now switched to another pair. But as I said, we just wanted to focus on the dollar CAD. Right, that's all I've got to say. Can I pass back to you, David? Yeah. Thank you so much for joining us. Thank you for being very patient at the beginning. I hope you've enjoyed what we have covered. If any of you have got any questions, please, if you can't think of the questions now, then drop me an email, or David, I'm Anna@Coulling.com, or David at quantumtrading.com. We're actually back later on at 6 o'clock UK time when we're going to be looking at the American stock market. So hopefully we may see some of you then.
Hi everyone, welcome back. Thanks, darling. And let me just run through and pick up where we left off. Staying with the dollar CAD, and I've got 3 workspaces here. This is again multiple time frames on TradingView, and really what I wanted to highlight here was the whole business going back to the issue of multiple time frames, because when you look at the dollar CAD, this is on the daily. So in this array, we go from 1 minute top left, so the top line is 1 minute to 10 minute, and the bottom line is 50 minute, right the way down to the weekly. And at the moment, the pair has been bearish for a little while. And again, it's you've got to be aware of what you're doing intraday. Am I trading with the dominant trend? And again, it comes back to this whole issue of, well, how far down do I look for the dominant trend? What is my dominant trend? The weekly? Is it the daily? Is it the hourly? What is it? So again, it's looking at it in the context of slower time frames. The dominant trend you're trading, are you trading against the dominant trend, or are you trading with the dominant trend? Clearly, if you are trading with the dominant trend, the risk on that trade is going to be that much lower. It has to be, because you are trading with everybody else. And that also applies very much to when you look at the matrix. All I've done here is isolate out the dollar. This is on the currency matrix. I've got a 1 minute, a 3 minute, and a 5 minute here. Remember, the currency matrix is very much a scalping tool because it's looking at things over a 7 period look back. So it's really only looking at the last 7 bars, 7 candles, and drawing the data in based on that time window. So this is working very, very close to the price action. Hence, the pairs will move up and down a lot within the various time frames because it's a scalping tool. Now, what we're looking for in terms of, from a trading perspective at any rate, what we want to see is we want to see all those isolated pairs pretty much moving together. Now, obviously for the dollar, if we're seeing strong dollar buying, then pairs like the dollar yen and the dollar CAD will be rising, and the dollar Swiss, and equally pairs where the dollar is the counter currency will be falling. So that's why we've got the pound dollar down here at the bottom. We've got New Zealand dollar. So in those pairs right now on the 1 minute time frame, at any rate, the dollar is being bought. Hence, you want to see the dollar yen rising. You want to see the dollar CAD, dollar Swiss. And ideally what you're looking for, and really what this very small time slice encapsulates, is that it's a very mixed picture at the moment. There is no strong sentiment, certainly on these faster time frames, for the dollar right now. Because if there were, what you would be seeing is you'd be seeing dollar buying or dollar selling over here, reflected over here, and also over here. And you're not. They're all over the place at the moment. There's no strong trend, in other words, because ideally, on the 5 minute and out to the slower time frames, if you're trading in that sort of time horizon, you'd want to see the dollar yen, the dollar Swiss, and the dollar CAD all marching up to the top here and collecting around the top here. And then all the others, the euro dollar, Aussie dollar, New Zealand dollar, and so on and so forth, all moving down to the bottom, really telling you at that point you have strong dollar buying, and conversely, the opposite would be strong dollar selling. But what you're seeing here is a real mixed picture. There's nothing consistent. It's just telling you in a very visual way that over a handful of candles, over the last 7 candles on that particular time frame, there really is no strong consensus. There's no strong trend. There's no strong sentiment one way or the other. Everything's kind of moving around for the time being and going sideways. Really, that's what's that telling you. Now, if I move over to the currency heat map, the big difference with the currency heat map, and the reason I put it up here is because on TradingView, and this is unique to TradingView, we can't replicate it on other platforms, but on TradingView, you can select your time frame. So I've got a 1, 5, 10, 15, 30. I've got a different array here, and I've gone right down to a slower time frame over here. So that's the first big technical difference in terms of how you can use the indicator, because on the other platforms you don't have that ability. It will have a certain set number of time frames allocated to the indicator, but you can't change them. On TradingView you can, and not only does it give you that option, but it also the option to run multiple. So as I've got here, I've got 3. So this is like a slowed down version, if you like, of the currency matrix, because the difference between the currency matrix and the currency heat map is that what the currency heat map does is it then weights this ranking according to the time frames. And as I outlined in the earlier conversation, that the slower the time frame, the greater is the weight that will carry. And it doesn't matter what you're looking at, that's a fact. And what we've done with the heat map is to convert that into this ranking so that a 30-minute time horizon, whatever is going on, this value here will carry more weight. The 15-minute will carry slightly less weight, but all of that is encapsulated in the ranking for that particular currency pair. And hence, what you see here is a weighting by, is a ranking by weight, and also they will move around far less frequently because that weight is the big influence in the ranking order. So whilst these move around, they do not move around at the same speed. So in a sense, what you're looking at is 2 different aspects of the same thing. On the currency matrix, it's very much geared around an intraday, very fast time frame, very much scalping. This is much more slowed down, and it's giving you a view on why a pair is ranking where it is. The pound yen, the dollar yen, and these pairs up here are all ranking highly because it's very bullish across these sentiment timeframes. And gradually, as you move down the ranking ladder, we move from where we've got all bright green and we start to see red coming in. And gradually, when we get right the way down to the bottom, it's pretty much all red across the piece down here. For that pair to change, what you need to see is you need to see a slow transition from the sentiment in the 1 minute, ultimately turning green. If that then ripples through to the 5 minute and turns green, then what will happen is this pair will start to rise up the ranking ladder. So again, it's just a great way of looking at pairs from a different perspective, a slower time frame perspective. Where is the pair I'm looking at? What is happening in the context of the matrix on the fast matrix? What is happening in terms of the currency heat map and the ranking that I'm looking at there? Because this is weighted, so it will move much more slowly. So these pairs may only move 1 or 2 slots in a day. But as I say, on the heat map for TradingView, you can speed that up by virtue of the fact you can change the time frame. So you could have a 1, 2, 3, 4, 5 up here and really look at this very quickly. So you'd have, in essence, a slightly slower version of the currency matrix. So you'd have a currency matrix which is working very quickly, but then you could have this, which has got the weighting aspect of time, but not going too far out. So you've got a really nice combination of very fast and slightly slower, giving you 2 perspectives on the same thing, but from a different time perspective, because this is weighted. So I just wanted to show you that to remind you of the fact that on TradingView, the currency heat map is such a versatile indicator because of this facility to change the time horizons. So it's just wonderful. It's a wonderful tool to use to give you that slightly different perspective when you're using it on an intraday basis. I'm going to wrap up there and very quickly run you through where you find all the bits and pieces. This is quantum trading, where you'll find all the current indicators for MT45, TradingView, NinjaTrader, and TradeStation. They are all there. You'll find special deals up here. If you've got a 1 or 2 indicators from us already, it doesn't matter whether you've bought in the last 10, 11, 12 years, we will have you on the system somewhere. So if you want to upgrade to a full package perhaps, or move on to one of the education programs, we will do that for you. You always get a full credit. And remember, if you invest in the full package, and indeed on the education programs as well, any new indicators that come along, you will get them free of charge. In fact, over here, this is the volume, the VRSI, which is one of our latest. This is a volume relative strength indicator. These colored volume bars down here. I've recorded a load of videos on this indicator, which you'll find on the quantum trading site. This is the Forex site. We're just working on updating the funded program. So that's on a pause at the moment, but we are broadening that out. We're building in some more levels. The older version, you could start on 5, 10 or 15K where you trade our money basically. So it's totally risk-free to you. The one-off cost of entry. We're broadening it out to include 1,000 level, 2,500. So you go 1, 2, 5, 10, 15, and then out. We've added on one at the top level as well. So you can start at 20,000. That's all being sorted out at the moment. It's a little bit, there's a few technical details we have to thrash out on it, but that's where we're going with the program. We've also simplified the whole thing down very much in terms of the rules and regulations. So we've made it much, much simpler, much clearer, I think, and much easier to understand, certainly in terms of risk management. What we've also brought in as well is the ability to trade pretty much any market at any level. On the evaluation, the old evaluation stage on the funded program, we only allowed for the 28 currency pairs. Now what we've included is you can trade the 28 currency pairs, you can trade a huge number of indices right the way around the globe, you can trade cryptos, and you can also trade commodities. So we've really opened it out, simplified it, broadened it, and bringing it, we will, once we've got it all sorted out, it will be back up and open for the students on the stock trading program, because we introduced it so that you could trade our money and really put to test the knowledge and skills that you've learned in the education program, and really leverage that in a funded program where you get kickbacks on profit, and it goes all the way from the starting evaluation level right the way up to $2 million. And you're earning all the time as well. Finally, just to Anna's site, this is annacouling.com. You'll find all the books there, all the links to all the various other pages, places on the various sites around the place, all the social stuff, and also Anna's latest blog post there as well. So thank you very much indeed for coming along today. Hope you've enjoyed it. We will be back at 6 o'clock UK time for the stock equivalent. So enjoy the rest of the trading day, and we will see you soon, and bye for now.